Hello students, today we shall discuss about the topic statement of balance sheet or statement of financial position or statement of financial condition. In short, statement of financial position, also termed as SOFP. You have already learned about the topic balance sheet. Balance sheet is a statement which shows the financial position of a business concern at the end of a particular period of time. Indian accounting standard doesn't provide any prescribed format for the preparation of balance sheet. The Indian Companies Act 2013 spells about the preparation and presentation of balance sheet. So every Indian company has to prepare and present the financial statement in the prescribed format along with prescribed note. Now I am going to explain the SOFP. Now we can explain the statement of financial position. Statement of financial position contains only two major items. They are assets and liabilities. You have already learned about asset. Asset is anything or resource that the company has earned. The assets are of two types, non-current assets and current assets. Liabilities are the obligation the company has to pay. Then first we can explain non-current assets. Under non-current asset, first one is property, plant, equipment. Property, plant, equipment contains land, building, plant, machinery, equipments, motor vehicles, etc. Then the next one is capital work in progress. This is unfamiliar to you, but this is nothing. It is the expenditure incurred for constructing or acquiring fixed asset. Then the third one is investment property. Investment property means investment in land, building, etc. Then the next one, intangible assets. Intangible assets are those which cannot be seen or touchable, which is nothing but it has no physical substance. For example, goodwill. Then the next one is other intangible assets like patent, copyright, trademark, etc. Then the next one is financial asset. Financial assets are in the nature of cash or financial in nature. The financial assets are again divided into four. First one, investment. Investment is nothing, money invested into some financial asset. Second one, trade receivable. This is the amount of bill to business by the customers when it delivers goods to customers. Then the next one, loans. Then the other one is others to be specified. We can specify the deposits, if any, can be into this section. The next one is biological asset. Biological assets are the assets that are living. For example, trees, animals, etc. Then the next one is deferred tax asset. What do you mean by deferred tax asset? Have you heard about deferred tax asset? Deferred tax asset means when a company pays a higher tax amount than what is the amount due. Then the next one is other non-current assets like security deposit, bank deposit, etc. Then the next asset is current asset. Have you heard about current asset? Current assets are the assets which can be realizable into cash within a short period of time. The current assets are again divided into four. First one is inventories. Inventories means stock. There are three types of inventories: raw material inventory, work in progress inventory, and finished goods inventory. Then the next one is financial assets. These financial assets are of short-term nature. They are again divided into investment, trade receivables, cash and cash equivalents, bank balance, loans, and others. Then the next one is current tax asset. What is current tax asset? When a company pays more tax than the amount due for the current year. Then the next one is other current asset. If there is any security deposit, bank deposit, etc. are to be specified in this section. Then we total the assets. Then our next head starts equity and liabilities. Liabilities are the obligation the company has to pay. First head is equity. Equity are the shareholders' claim over the assets of the company. Equity consists of equity share capital contributed by shareholders. Then other equity. Other equity consists of reserves and surplus. Reserves and surplus as a part of equity. Next one is non-current liabilities, also known as fixed liabilities. The fixed liabilities are again divided into four. First one is financial liability. The financial liabilities are of financial nature. They are again divided into three. First one is borrowings. Borrowings are the money taken from bank or some other person. Then next one is trade payable. Trade payable is the amount billed to the company by its suppliers. Then the next one, other financial liability. If there is any bank loan, it should be mentioned in the section. Then the next one, provision. Provision is the amount kept aside for meeting an obligation. Then deferred tax liability. Deferred tax liability means when a company pays lower the tax than what is due. That is deferred tax liability. Then if there is any other non-current liability, it should also be mentioned in this head. The next topic is current liabilities. You have already learned about current liabilities. What do you mean by current liability? Current liabilities are those liabilities which can be converted into cash within 1 year. The current liabilities are again divided into four. First one, financial liability. Financial liabilities are of short-term nature are shown under this head. Then the financial liabilities are again divided into three. First one, borrowings. Borrowings means money taken from some other person. Trade payable. Short-term trade payable is mentioned in this head. The next one, other financial liabilities. Then the next one is other current liabilities. If there is any other liability, it should also be mentioned in this head. For example, bank overdraft. Then the next one, provision. We have already discussed about provision. Then current tax liability. Current tax liability means when the company pays less tax than the amount was due. Now I am going to do a problem. Prepare a statement of financial position of Amulya Limited as on 31st March 2019. First you should read the problem thoroughly. The first item is trade receivable. You have already explained the term trade receivable amounted to rupees 4,70,000 which are placed under the head current asset. Then the next item is share capital amounted to rupees 30 lakhs. Share capital is a liability which is placed under the head equity. Then the next one is cash and cash equivalents which are under the head of current asset. So it should be placed under the current asset. Property, plant, equipment are of fixed nature. These are the first item in the non-current asset. Then goodwill. Goodwill is an intangible asset. So it should be placed under the non-current asset. Then the next one is retained earnings. What do you mean by retained earnings? Retained earnings are the portion of a business profit which are not distributed among shareholders as dividend. The retained earnings are a part of other equity, so it should be placed under other equity. Then the next one is deferred tax asset is a asset which is of non-current nature, so these are placed under the head non-current asset. Then the next one is other current assets. Other current assets are placed under the current assets. Then the next one, deferred tax liabilities are the fixed liabilities. They are shown under the non-current liabilities. Then the next one, bank overdraft. It's a facility available to businessmen. It is shown under the head other current liability. Then the next one is bank loan. Bank loan is a way of borrowing, so it should be placed under non-current liability. Then the next one, trade payable. Trade payable is the amount available to the suppliers by the business. So it should be placed under current liabilities. Then the next one is environmental restoration provision. This is a provision for environmental protection. This is long-term nature, so it should be placed under non-current liability. Then the next one is short-term provision. Provision is the money set aside for meeting some obligation. This provision is short-term in nature, so these are under the head current liability. Then the next one is current tax payable. This tax is for the current year. It's a liability for the businessman, so it should be placed under current liability. Now we can total the assets and liability. the assets and liabilities will be equal.